Good day, everyone. Today is September 18th, 2025. This is part number 1. We saw yesterday the effect of the reduction in interest rates. The Federal Reserve Bank met and reduced interest rates by 1/4 percentage point. Initially, the market sold off on the news, including gold and equity, but then Powell indicated that they will be lowering rates 2 more times this year, and this caused the markets to rally in a big way, equity markets that is, and they ended the session at the highs. And now, as we speak, overnight, the futures markets indicating even a higher, much higher prices on the equity markets. They are, in fact, at all-time highs. Gold suffered some little setback, profit-taking. However, the trend on gold, just like equities overall, whether it's short-term, medium, or long-term, it's still intact and it's bullish. Now, what does that mean for today? We start with what we call the average range. We determine the movements of the market, and then we determine the risk. Then afterwards, using data, we determine how we should transact in the market, which direction we should take. Let's start with assuming or computing risk, assessing risk. We start with the average range. Gold has a $44 average range. I'm talking about the XAU. It moves within $44 from highest to lowest point, or vice versa. That's based on the last 9 days. That's the average move. 40% of that is $17.50. That's how we determine the risk. So when the market moves $17.50 against our entry, we will exit that position. That's how we determine risk. So it's very important that we determine how to enter the market, because the exit has been set. $17.50 maximum. We'd like to lose less if possible. We'd like to win, but if we're wrong, that's the maximum loss. Now we move to the S&P. It has a $48 average range based on the last 9 days. 40% of that is $19. That's how we determine risk for today or any given trade on the S&P. NASDAQ, it moves within $270 per day. The risk should be $110 or so. We just determined the risk. Now, as far as entry, we need data for that. Data determines which direction we should seek. Is it going to be uptrend, downtrend, or sideways? And I'm talking about today and more likely for 4 hours. The trend is what we care about, is from the opening of U.S. markets for the next 4 hours after that. That's what we're really trying to ascertain and bet on, if you will, or trade in that direction. And then we manage the risk, like I mentioned. We do that every day the same way. That's how you end up with very similar results, especially on the downside. You don't have an outlier day where you lose 5 times what you could make. This should never happen. To ensure this doesn't happen, that's how you do it. You determine the risk the same way every time. We'll come back later today at 10 a.m. Eastern time or before. Speaking of 10 a.m., we have a major report leading economic indicators. This will have an impact on the market, but by then we would have determined which direction we'll be trading those markets. Until that time, I wish everyone the best of luck, and thank you.